in place. But we think that, XRP is, well past the journey of even new chains, toward that end. And I think, quite frankly, one of the things that we like the most.
I think my guess is we're going to bottom sometime in the summer. I feel like we're in the process of squeezing the excess leverage out of the system, which is what happens during bear markets. All the financial engineering and excess leverage gets squeezed out of the system. You saw that in 2022 when GBTC started to trade at significant discounts and things like Celsius went bankrupt. You're seeing that now with the digital asset treasury companies trading closer to NAV, and with things like Stretch, MicroStrategy's digital credit instrument showing stress with funding rates going to zero. So I think we're within a few months of hitting bottom from a leverage perspective. And then I think we'll start to recover. I don't think we'll be back at new all-time highs by the end of the year. But will we be higher than 60? Yes. Could we be like knocking on the $100,000 level? If things go well, I think we could. But I think you're going to see us move into the next sort of bullish cycle of crypto in the fall. And all the data points I'm looking at suggest that we're on track for that.
Thank you.
So that is Matt Hogan from Bitwise, and I share his opinion. I do think that we are on the precipice of starting to see a formal bottoming out of crypto. Now, that does not mean that I don't think that we could go lower. I'm preparing some capital on the sidelines in case we do, but I'm also taking advantage of the current discounted environment under the consideration that we are discounted comparative to recent altcoin valuations at all-time highs. Now is an opportunistic moment, in my personal opinion, not financial advice, to capitalize on getting in to digital assets and certain layer ones before the institutions come in and gobble up a very large portion of the market share. Along with some current individuals that work at Franklin Templeton, giving you their perspective on what's taking shape and talking about digital assets like XRP. Before we dive into that, I want to bring you over to this Global Crypto Evaluation 2026 report from CoinDCX, which is one of the largest exchanges in India, where they put out a very interesting take to the beginning of this report. And it aligns exactly with the video clips that I'm going to share with you guys today and with what Matt Hogan just said. And it starts here by saying, the global regulatory picture for crypto assets in 2026 is best understood as having crossed the threshold from norm articulation to norm internalization. Earlier phases of regulatory engagement were characterized by definitional ambiguity, jurisdictional hesitation, and fragmented supervisory responses. That phase has now decisively ended. Jurisdictions are no longer debating whether to regulate crypto assets, but rather how to embed them within existing financial, monetary, and prudential systems. This transition is driven in large by part the standard-setting influence of bodies such as the Financial Stability Board and the Financial Action Task Force, whose principles, particularly the doctrine of the same activity, same risk, same regulation, have begun to crystallize into enforceable domestic frameworks. At a structural level, the most consequential development is the functional reclassification of crypto assets within the financial system. Crypto has migrated into the operational core of finance. That is a huge sentence right there. Okay. For anybody not paying attention, just send them this single one portion of today's video breakdown. Now is the time to start to pay attention, considering that we are at discounted valuations and the entire regulatory landscape is changing. Parallel to this functional shift is the institutionalization of crypto markets. The entry of banks, asset managers, and payment intermediaries has fundamentally altered both market structure and regulatory expectations. Crypto intermediaries are now expected to comply with prudential norms analogs to traditional finance institutions such as capital adequacy, segregation of client assets, governance standards, and operational resilience. So I thought that that was such a fitting intro to today's video breakdown. Reading that for you all, I want to take you all over here, and we're going to start with this most recent event. Tokenize This that just took place. This was uploaded just today, July 11th, 2026. Still only has 11 views. This is Lauren Berta, product lead tokenization and stablecoins at Ripple. And listen to what she says about having conversations with banks and how they are for a fact interested in holding digital assets.
I'm going to attribute a lot to regulation. I think, I've been at Ripple for 4.5 years. Ripple's been in the business for 10. We've been talking to banks the whole time. The conversation post-Genius completely flipped from, can I hold this thing? What is this thing? How do I treat it? To now the efficiencies, the liquidity unlocks have become really obvious. And we get to the point of conversation where we get the accounting team and they say, how do I pay my taxes on this? And I think that's a really great maturity we've reached. I think.
Now, one thing I want you guys to pay attention to is she mentioned liquidity unlocks.
Now the efficiencies, the liquidity unlocks have become really obvious.
These financial institutions have realized we're in this phase of unlocking liquidity. Okay. And that goes hand in hand with something that Ashish Birla said. And considering that she mentioned Post Genius, here we have Ashish Birla, the CEO of Evernorth, the largest DAT for XRP, digital asset treasury for XRP, ex-Ripple representative. Listen to what he says here about how regulation will be a catalyst that allow institutions to flood in, and then hear him mention and talk about how stablecoins and how they will help expand liquidity on the XRPL.
You know, from the start, I really thought that this place was, you know, back in 2013, I thought maybe 3-4 years.
Yeah, it will be good by 2017.
We'll be good by then.
Yeah.
And I'll say it's taken a lot longer, but I think it's moving in a faster pace now than I had envisioned, you know, back in 2013. And I think a couple of things. Number one, financial institutions are now leaning in, which is very different than it was in 2013.
Mm-hmm.
I think secondly, like governments are now embracing.
Mm-hmm.
And that's one thing I got wrong. I was like, I didn't think that you needed all the regulation back in 2013 to make this happen.
Yeah.
But now it's quite evident that that's going to really be a catalyst and accelerant to
Mm-hmm.
blockchain adoption.
I know Evernorth spends a fair amount of time kind of looking under the surface of blockchain activity. And at the end of June, the team published a report on RLUSD and XRP. Kind of give us a high level breakdown of what your team found here for those of us who haven't seen it yet. Oh, I saw it, but listeners.
Yeah, so you know, that's something that we've been working on for a while. And the question was, hey, do stablecoins like you replace the need for digital assets or XRP? And, you know, I think that the data shows clearly that when you brought more stablecoins onto XRP, that created more economic activity on XRP itself. And one reason for that is global liquidity today, you know, outside of blockchain. If you look at equities, if you look at gold, if you look at FX, which is foreign exchange, it's all based predominantly as US dollar as the base pair. So like if you want to have a good liquidity venue on XRP or on any other chain, you need a robust stablecoin to trade against.
Mm-hmm.
So that's paramount. That's how the traditional markets work, and that's how crypto markets work. And the data suggests that since RLUSD has been scaling, you've seen growth in liquidity on XRP as well. And even 12% now of all trades are going through RLUSD. It was 1% several months ago. So you're seeing that happen in real time on chain. So you bring a solid stablecoin on chain and it creates more liquidity.
I've been at Ripple for 4.5 years. Ripple's been in the business for 10. We've been talking to banks the whole time. Now the efficiencies, the liquidity unlocks have become really obvious.
And why is liquidity important? Because like if you don't have liquidity around these tokens, you're sort of like left waiting for your Uber forever, right?
Yeah.
You want to create a good experience, and creating more liquidity around your token is super important for a good experience on blockchains.
Yeah. Do you think that would have been possible?
And so you see the connection where we have the representative on stage talking about how they've been talking to banks for the last 10 years, specifically talking about how now they're comfortable holding these digital assets and how they're realizing that we are about to see this liquidity expansion phase. And it starts with stablecoins. And now you have Ashish Birla talking about how RLUSD is just simply going to help expand the liquidity on the XRPL, which will inevitably benefit XRP, the digital asset. Now, if this isn't the utmost confirmation that largest financial institutions are having conversations with Ripple representatives and have personal opinions about digital assets like XRP, I don't know what else is. This is Roger Baston, EVP and head of digital assets at Franklin Templeton, and is asked the question directly, what is your opinion on XRP? I will let you guys make your own judgment on what he says and how he responds, but take a second and listen to this. This is 110% confirmation that, in my personal opinion, if Franklin Templeton representatives feel this way about XRP, then I will go outright and assume, based off of my personal speculation and research, of course, that other institutions and other large entities in the space feel the exact same way. Take a second and listen.
And again, a large part of like all of the good work that you're doing, Roger. I'm curious, like a lot of chains are coming to you and they're like, hey, we want Franklin Templeton to issue, Benji or whatever on their chain. How do you evaluate the right chain? And specifically, like, where does XRP fit into that? And what are you excited about with regards to, XRP and institutional adoption and also the chains that come to you, which I'm sure are coming to you weekly at this point?
Well, yeah, because there's a lot of new chains too. And I think one of the things another trend that you see globally is that very large institutions, kind of whales that are sitting out there in the global economy, are finding, they're understanding this ecosystem a little bit more, and they're trying to migrate people to using, chains or side chains that they have decided to kind of adopt. And so you do see a proliferation of that. And, from Franklin Templeton's perspective, we're going to go where the customers are, quite frankly, right? You're always listening to your customers. And, XRP, the community around XRP is pretty aggressive at, growing and iterating for these purposes, these trillions of dollars purposes that, that we've been speaking about before. And so we have a lot of enthusiasm about working with the team specifically. When our journey started with the global regulators, and, we touch a lot of different global regulators, we did create a kind of a selection criteria that kind of, I hesitate to use the word protocol, but it does become kind of a standard when you're the first one through the door and you're learning up these regulators, quite frankly, toward, not that you're, trying to be a decentralized, permissionless issuer of an asset, but you're actually, you're in a securities business and you're permissioned and you're just trying to use these rails as your underlying, data kind of database operating system by and large. And so there's a number of things that we kind of punched through there with the regulators to put that template in place. But we think that, XRP is, well past the journey of even new chains, toward that end. And I think, quite frankly, one of the things that we like the most as the technology at XRP continues to iterate is just the leadership. When I go into meetings with XRP and Ripple, I'm looking at, quite frankly, I'm like looking in the mirror at people that have the same, decades of experience.
Okay, I just want to pause right there. He said, when we go into meetings with XRP and Ripple, regardless of the vocabulary that he used, he just confirmed that Franklin Templeton representatives are going into meetings with Ripple representatives and discussing and talking about XRP.
When I go into meetings with XRP and Ripple,
so if they are, that to me is confirmation that there are other financial institutions likely as well having similar meetings, right? Again, speculation, but still nonetheless good speculation in my personal opinion. So I'll leave that there. Hopefully you all enjoyed today's video breakdown. Remember, none of this is financial advice. I am not telling you guys to go out there and invest your hard-earned money into XRP, the digital asset. Do me that favor, smash that thumbs up button, subscribe to the platform. We appreciate the love and support here at CYPRX. With that being said, I will see you guys in the next video breakdown.